Hello everyone, welcome back to Finance Lingo. In this video, I'm going to show you what is the very daily mistake made by investors when they invest in foreign shares. I myself made this mistake and I realized that it's very important for me to highlight to this mistake early to a lot of investors because the profit and loss can be very significant. So let's start off with the disclaimer. This presentation is provided to you for general information only and does not constitute a recommendation, an offer, or solicitation to subscribe for or purchase or sell the investment product mentioned herein. Okay, so let's start off. So I'll be showing you to an Excel sheet table, and I'm going to show it to you how to obtain the exchange rates on Poems 2. So this is Poems 2 over here. So what you need to do, just click on the announcement, click on the exchange rates, and you'll be presented the list of exchange rate offered by Poems 2. So as for today, we are just going to take the US dollars, okay, as an example. So what we have here is that the US dollars is having the bid at 1.4053 and the offer is 1.4126. So okay, likewise what I did was I have copied and pasted the currencies shown over here, 1.4053 and 1.4126. So okay, so we won't be needing these poems too at the moment. So from here we actually work out that there is a price difference, just let me, okay, of 0.0073. So this price difference, when we divide it by the bid price, we realize that the price difference in between these two prices is 0.517%. So from here we take a midpoint, which is the sum of these two divided by 2, we work out that the mid is at 1.409. So from here, I'm going to arrange these three prices together. This is the bid price shown here, and the offer price shown on the right is 1.4126, and the mid is in the middle. This is for simple visualization of what's happening when you buy a foreign shares. So when you buy a foreign shares, you need to convert, for this instance, buy the US dollars at this price to buy the US shares, and subsequently when you decide to convert the US shares back to Sing dollars, you need to sell the US dollars back at this price. So you notice that what you are doing each time when you invest in the foreign shares, you are buying at a higher price, slightly higher price, and you're selling back at a slightly lower price. Well, the 0.06 or 0.05 difference, it doesn't look very significant, but honestly when I work out the numbers, it's very significant. So let's move on. So what I did here was a similar table as the one shown above, but I did, for simplicity, I'm gonna make the offer price $1.40 to make the calculation later on simple. So when we reverse the equation back with the price difference back, it comes out to 1.3927. So likewise, the rest remain constant, okay, except for this price difference. This is derived from this difference divided by the bid price. It's very insignificant difference over here. So we are going to use this table later on for a lot of calculations later on. Okay, just one moment. Let's cover this two up. So okay. So now assume these investors have 14,000 Sing dollars and he wants to buy 10,000 shares of Apple at what USD $1. So as a start, we're going to assume that the brokerage rate is 0 for simplicity. Okay, so when we convert this 14,000 Sing back to USD at this exchange rate 1.4, we get $10,000 Sings to obtain the 10,000 shares. So this is simple. Okay, now few years later, the investor is going to sell the same share back, okay, and there's no change in share price. So when the investors sell the shares back to the market, he get back 10,000 USD. So likewise, when he decide to convert back to Sing dollars, he actually getting back 13,927 based on this bid exchange rate. So you probably notice that the investors lost some due to currency changes, price changes on the bid and offer price. So in this instance, well, this $73 may not be a big factor here. So well, let's move on. So now assume the same situation, the investor have 14,000 Sing dollars. and likewise he's going to buy 10,000 US Apple shares at US $1 each for with a hence he converts 14,000 Sing dollars to back to USD 10,000. Okay, good things now here we are looking at that is that the share price have rose from $1 to 1.01. Now here's the tricky part. Now if the investor were to convert it back to USD, he get $10,000 and 100, and that's a good thing with the capital of 10,000. So he probably have made a $100 USD profit. All right. So now if he were to convert it back to Sing dollars, you notice that with this 10,100 USD, we'll convert it back at this price 1.3927, which is the bid price. The investor only get back $14,066, which we work out over here. So you notice that this Sing dollar difference here is only 66 when he made 100 USD. So you probably will be very alarmed or very shocked in this area. All right. So now let's look forward. How come? So where did the investor lose? So the investor actually lost on the capital exchange back to Sing dollars there. So now when we look further, what the investor should do, he should maintain the settlement currency in USD. All right. So he'll get back 10,100 USD in the account. Okay. Do not convert it back to Sing. So with the $100 USD, okay, he can just do $100 USD conversion back to Sing dollars later on, and he get back $139. So you probably notice that this price, this profit, and this profit is a big difference here. It's almost doubled. So investors likewise should not convert it the entire contract back to Sing. Maintain it in USD and later on convert the profit regions back to Sing only. Okay, I know a lot of investors will be very happy to make $100 profit or a lot of USD profit and would like to immediately convert it back to Sing. I strongly do not recommend you to do that. It's very obvious, for obvious mistake. Okay, you can see that there's a big difference here. So what we can conclude here is that if you want to enjoy the profit, settle in USD or retain in the same currency that is traded, because I know a lot of investors will like to trade again. So if you want to take the profit, convert the profit portion later on, and so that you can enjoy the profit. Do not convert the entire contract back to Sing dollars. Okay. So from here we can have a second conclusion is that multi-currency function is very important when you buy foreign shares. Okay, so in Philip, cash management and the cash prepare account is relevant here. Cash trading account, avoid using it to buy foreign shares because you get convert to Sing dollars directly back, because there is cash trading account does not hold cash. All right. So here we have identified that it's very deadly mistake. It's very a very big mistake made by investors when they convert directly back to Sing. Okay, this is what I'm going to highlight. So another thing I'm going to teach you guys here is currency exchange. So okay, this is a table that I'm going to show to you guys. So okay, when you invest in foreign shares, you need to identify the possible situations of the foreign currencies exchange risk. So now assume this situation happens. There's two likelihood, okay, on the share price movement. The share price can go up and the share price can go down. Okay, and currencies can go appreciates and or depreciates when you buy and sell later on. So now for simplicity, we're going to assume a 5% changes on the share price and a 5% appreciation and depreciations on the currencies. Okay, so in this first box here, we note we have a share price up by 5% and the currency appreciate by 5%. So when the investor sold all the shares, he probably have noticed that, wow, a 10% gain when he actually made actually 5% gain on share price, because the remaining 5% come from the currency exchange. Similarly, when the share price go up by 5%, but unfortunately the currency depreciated by 5% during this time, you have probably lost, get nothing from this appreciation, this investment. Here, now assume the share price did go down by 5%, but the currency appreciated by 5%. You probably notice there is no change on your investments. likewise, when that's down by 5% and the currency depreciate by 5%, oh my god, you have negative 10% on the investment positions. So investors do need to take note of the share price movement as well as the currency's fluctuations. So, but of course, currency does not fluctuate this in such a magnitude. There's greater chance of the share price going up and down. But nonetheless, investors should be aware of this risk. So that's what I have for you guys today. So I hope you guys enjoyed this video. And if you do not have any trading account and you like to invest in foreign shares, maybe Alibaba, or Apple, or Microsoft, or McDonald's, drop me an email. We can arrange an appointment. And this is my email at rolandpbk@philip.com.sg, or my office desk at 6532-0126. So I hope you guys enjoy the video and learn something from today. So that's all. Goodbye.